Operation Midnight Hammer, a recent U.S. military initiative targeting Iran's nuclear infrastructure, has heightened tensions in the Middle East and raised concerns about the global oil supply. Despite this geopolitical escalation, equity markets have remained stable, indicating a potential disconnect between energy market volatility and broader investor sentiment. Crude oil futures have surged in response to the operation, reflecting increased tanker rates and anticipated rises in gasoline prices worldwide. This development highlights the sensitive balance between geopolitical events and their impact on commodity prices. The energy sector is particularly cautious, given the potential for further disruptions in oil supply chains. While China and Russia's geopolitical and economic constraints limit their support for Iran, the isolation of Iran could lead to unpredictable responses that may further unsettle energy markets. Investors are advised to remain vigilant, as the ongoing conflict poses significant risks that could eventually ripple through equity markets. The situation underscores the importance of monitoring geopolitical developments and their potential impact on both energy prices and broader economic conditions.
India is nearing the completion of free trade agreement negotiations with the United States and the European Union, as announced by Finance Minister Nirmala Sitharaman. These agreements are part of India's strategic push to boost exports to achieve a target of $2 trillion United States dollars by 2030. Having already established trade agreements with the UAE, Australia, and the EFTA bloc, and concluded negotiations with the UK, India is intensifying efforts to finalize deals with the US and EU. The completion of these agreements is expected to enhance market access for Indian goods and services, potentially driving significant growth in India's export sectors. In fiscal year 2025, India's exports of goods and services reached a record $825 billion United States dollars, marking a 6% increase despite global trade uncertainties. This growth outpaced the global export growth rate of 4%, underscoring the resilience of Indian exporters. Key sectors like pharmaceuticals and gems and jewelry are performing well, contributing to this robust export performance. Financial Services Secretary M. Nagaraja highlighted India's strong economic prospects amidst global geopolitical challenges, emphasizing the country's integration into the global value chain. The Finance Ministry is committed to supporting exporters through policy initiatives and financial aid, backed by a robust financial system characterized by adequate capital and low non-performing assets.
HDB Financial Services, a non-banking financial arm of HDFC Bank, has announced its initial public offering (IPO) with a price band set between 700 rupees minus 740. This announcement has led to a significant correction in the grey market price of HDB Financial's unlisted shares, which were previously trading at 1,250 rupees. The sharp decline highlights the risks associated with investing in unlisted shares, particularly in the grey market, where price discovery is inefficient due to limited public float and high volatility. Investors who engaged in grey market trading prior to the IPO announcement are facing substantial losses, reflecting the broader risks of investing in unlisted shares without the regulatory oversight of formal exchanges. The situation underscores several risks inherent in the grey market, including fraud risk and timing risk. The grey market, which operates outside regulated exchanges, often involves higher broker commissions and can expose investors to fraudulent schemes. Additionally, the timing of investments in unlisted shares poses challenges. While early investments might be acquired at a discount, they come with uncertainties regarding the company's future growth and IPO prospects. The HDB Financial case serves as a cautionary tale for retail investors, emphasizing the importance of due diligence and awareness of the risks involved in unlisted markets. This scenario also highlights the regulatory concerns raised by the Securities and Exchange Board of India, SEBI, regarding the transparency and valuation practices in the grey market.
Union Finance Minister Nirmala Sitharaman has refuted claims that India is a tariff king, a label previously attributed by former U.S. President Donald Trump. Speaking at the Exim Bank Trade Conclave in Delhi, Sitharaman emphasized that India's effective customs duties are significantly lower than the maximum rates often cited in international discussions. She clarified that while India sets maximum tariff thresholds through parliamentary approval, the actual applied rates are substantially lower, leading to a misconception about India's tariff regime. The finance minister highlighted that the 2024-25 budget reduced the number of tariff categories to just 8, including a 0% rate, aiming to streamline and rationalize the country's tariff structure. Furthermore, to enhance India's trade environment and support exporters, Sitharaman unveiled a 5-step strategy. This includes upgrading transport and logistics to reduce costs, providing targeted support for micro, small, and medium enterprises, MSMEs, easing access to trade finance, developing trade clusters, and continuing free trade agreement (FTA) negotiations with key global partners. These initiatives are designed to boost manufacturing, encourage value addition, and make Indian goods more competitive in the global market. By addressing the tariff king narrative, Sitharaman aims to reposition India as a reform-driven, export-friendly economy aligning with global standards.
The newly announced EU-Canada Strategic Partnership of the Future aims to strengthen trade, competition, and economic security while focusing on clean energy and industry. Spearheaded by Canadian Prime Minister Mark Carney, EU Council President Antonio Costa, and European Commission President Ursula von der Leyen, the partnership intends to enhance energy supply chain resilience and diversify critical mineral supplies essential for energy and digital transitions. This initiative includes the exploration of carbon pricing systems and carbon border measures, and it marks the beginning of Canada's participation in the Global Energy Transition Forum, which targets significant increases in renewable energy capacity and energy efficiency by 2030. This partnership is poised to significantly impact Canadian businesses and workforce, particularly in the clean energy and technology sectors. With the EU's commitment to investing over $500 billion CAD annually in clean energy and technology, the agreement promises to create new trade opportunities for Canadian companies by facilitating access to essential minerals and clean electricity that align with the EU's decarbonization goals. This strategic alignment is expected to bolster the competitiveness of Canadian industries, enhance supply chain resilience, and secure long-term economic benefits. The partnership underscores the growing global emphasis on clean energy as a means to mitigate energy vulnerabilities and drive sustainable economic growth.
Boeing Company is under scrutiny by the National Transportation Safety Board, NTSB, following a mid-air pressure loss incident involving an Alaska Air Group Inc. flight last year. The NTSB is set to hold a hearing to investigate Boeing's oversight and production practices related to the incident, as highlighted by NTSB Chair Jennifer Homendy. This development adds to Boeing's recent history of safety challenges, including the well-publicized crashes of its 737 MAX aircraft in 2018 and 2019, which together resulted in 346 fatalities. These incidents have significantly impacted Boeing's reputation and consumer trust. The outcome of the NTSB hearing could have substantial implications for Boeing, potentially affecting its stock performance and market perception. The aerospace giant's handling of safety procedures and quality control is under the microscope, which could lead to further regulatory scrutiny or changes in operational practices. For investors and market analysts, Boeing's ability to address these issues effectively is critical, as it could influence the company's future profitability and its position in the competitive aerospace industry.
Brookfield Asset Management Inc. faces a significant financial challenge with its investment in the Rutas de Lima toll roads in Peru. Initially viewed as a promising venture into a rapidly expanding market, the project has become a $2.7 billion United States liability due to political and legal complications. The toll roads have sparked public protests over costs, corruption allegations against local officials, and disputes with both the Peruvian government and Lima's city administration. The situation has escalated to the point where a populist mayor is actively seeking to terminate the toll contract, leading Brookfield to initiate arbitration, claiming illegal seizure of the roads by Peru. The financial implications for Brookfield are severe, with the project currently unable to collect tolls and at risk of default, according to S&P Global Ratings. This predicament underscores the risks associated with infrastructure investments in developing economies, where political instability and corruption can derail projects. Brookfield's legal actions aim to recover the enterprise value of the project, but the outcome remains uncertain. The broader impact on investor sentiment towards Peru is notable, with Brookfield expressing reluctance to pursue further investments in the country unless the dispute is resolved. Despite this, Peruvian officials maintain that the issue has not deterred other potential investors, highlighting the complexities and risks inherent in emerging market investments.
The latest financial focus is on the burgeoning field of artificial intelligence, AI, with significant investment opportunities highlighted in the sector. The article identifies 5 key stocks that are poised to benefit from the ongoing AI revolution, emphasizing the strategic advantage of investing in companies that provide the essential infrastructure for AI development. NVIDIA stands out with its transition from a GPU-centric company to a full-stack AI computing firm, crucial for robotics and autonomous vehicles, a market projected to reach $375 billion by 2035. Meanwhile, Amazon's deployment of 750,000 robots in its fulfillment centers signals a potential 50% reduction in fulfillment costs, potentially driving its operating margins from 11.8% to over 31%. Meta Platforms is channeling billions into AI talent, aiming to integrate AI with its metaverse ambitions, which could evolve into a multi-trillion-dollar market. ASML holds a critical monopoly in extreme ultraviolet lithography machines, essential for next-gen AI chip production, ensuring its dominance in AI hardware. S&P Global, while not directly building AI, provides the indispensable data that fuels AI-powered trading systems, benefiting from the industry's growth regardless of which player succeeds. These companies collectively represent a strategic investment in the AI infrastructure, offering diversified exposure to the entire AI ecosystem, akin to the picks and shovels strategy during the California gold rush.
S3, a recruitment firm specializing in STEM industries, experienced a significant share price increase as demand for contractors in the U.S. mitigated a global hiring downturn. Despite a 14% drop in net fees to £159.1 million over the 6 months ending in May, the company saw a sequential improvement in its contract segment, particularly in engineering roles in the U.S. This uptick contrasts with the broader industry trend, as evidenced by similar challenges faced by competitors Hayes and Robert Walters. The global hiring slowdown has been exacerbated by tariffs imposed by President Donald Trump, including a 10% baseline levy on most U.S. goods imports, which have heightened economic uncertainty. In the UK, Stree's net fees plummeted by 28% to £14.2 million, coinciding with a decrease in job vacancies by 63,000 due to economic pressures, such as increased national living wage and national insurance contributions. The company's performance in Germany and the Netherlands also suffered, with significant declines in net fees due to reduced demand for technology and engineering roles. Nevertheless, S3 remains optimistic, with CEO Timo Lane expressing confidence in the company's resilience amid challenging market conditions and highlighting the influence of global megatrends on the future of work. Despite the current hurdles, S3 anticipates achieving approximately £25 million in pre-tax profits for the financial year.
Illinois is grappling with a significant housing shortage, with a current deficit of 142,000 units and a projected need for 227,000 new homes over the next 5 years. According to research by the Illinois Economic Policy Institute, ILEPI, and the Project for Middle Class Renewal, PMCR, at the University of Illinois, this shortage is driven by a combination of robust employment growth, rising incomes, and increased household formation, all of which have heightened demand for housing. However, supply has not kept pace, with new home listings plummeting by 64% and a significant drop in new construction permits over the past 5 years. The state's housing market has seen a 37% increase in home values since 2019, exacerbating affordability issues as insurance, property taxes, and mortgage rates climb. The study highlights that macroeconomic factors such as a nearly 40% rise in 30-year fixed mortgage rates and a surge in investor ownership of housing near metropolitan centers like Chicago have further strained the market. To address this imbalance, the researchers propose a range of policy interventions, including easing zoning restrictions, reforming parking requirements, and offering tax incentives for developers. These measures aim to boost housing supply, reduce costs, and enhance affordability. As Illinois faces these housing challenges, the report underscores the need for strategic policy actions to stabilize the market and meet the growing demand for affordable housing.